Most people are being sold the wrong type of life insurance, and over a lifetime, it could be costing you hundreds of thousands of dollars. So today on the Fiscal Clinician Podcast, we're breaking down whether you even need life insurance, how much you need, and why most people are overpaying for the wrong type of life insurance.
Okay, so let's dive right in. I feel like I've heard so many different opinions on this, Josh. Let's just start simple. Why would I even need life insurance right now?
So its income replacement is its primary function, and it exists for one main reason: to protect the people that depend on your income.
So if no one depends on my income, do I still need it?
Yeah, that's a great question. You really don't. There are probably some special situations in which you might still need it. But like if you're a single person, you're not married, you don't have any kids, then there's really no reason for you to have life insurance because there's no one relying on your income. And so if someone's trying to sell you life insurance, it's probably because they're going to make money off of you and they're going to get a commission from it.
Wait, but I feel like I've heard people say you should get it young.
Yeah, and there is some merit to this, Devon. The younger that you start life insurance, the cheaper it's going to be because basically you're less risk to the life insurance company. If you're young, not to get too morbid, but there's less of a chance of you passing away and dying and using that life insurance. So for example, like if you're married, still is a good idea for you to get life insurance. But if you're not married and you don't have any kids, it really doesn't make sense because there's no one relying on your income. So life insurance is not for you, it's for your family and those relying on you. It's kind of confusing in the terminology, but if I buy a life insurance policy for myself, my family is going to be the one that benefits. And so if I have, let's just say, $1 million life insurance policy on myself, something crazy happens, I passed away, my wife and then my child as well would be the beneficiaries of that life insurance policy. Specifically at this point, my wife, because she's the only adult in the household. And so today we want to explain the basics of life insurance. We're not experts on life insurance, but we know a lot to be able to at least cover you and make sure you're not getting scammed or overpaying for the type of insurance.
And then I've also heard there's term insurance versus whole life insurance. So what actually is the difference between a term life insurance policy and a whole life insurance policy?
Yeah, it's a great question. So term is really simple, temporary, and cheap. You basically buy the insurance for a certain timeline. So let's say you bought a 20 or 25 year term insurance. That means you would be paying the same price, the same monthly premium for those 20 or 25 years. And you would have the insurance during that whole time. But once that insurance ends, you're done and the insurance lapses. A lot of people think that if you buy a 20-year insurance plan, you're locked into that insurance for 20 years and you could just stop paying for the insurance, but then it would no longer be covering your family. So if you committed to like a 25-year term life insurance policy, that doesn't mean you have to stay on that plan for 25 years, but basically that you just locked the rate in for 25 years. Whole life insurance, on the contrast, it's combining a couple different things. It's basically insurance plus an investment or plus a cash savings rolled into one.
So in term life insurance, it's essentially only a dedicated certain amount of years. Is that correct?
Yep. Yeah,
Gotcha.
exactly.
So now with whole life insurance, what is the bigger benefit versus term life insurance?
Yeah, the idea is they're trying to do two things at once. So people will say like, oh, you're covered for your whole life. That's part of it. For a term insurance, you're only covered for a certain amount of time. But for a whole life policy, you're often covered for your whole life. And so you just pay that premium for a lifetime. And essentially what the whole life does is it combines your insurance, your life insurance to cover you, but it also combines your investing or basically like a cash savings rate. The problem is the investment sucks. It's basically making the amount that a money market fund or a high yield savings account would be making. So anywhere from like 3 to 5%. And so that's why we don't recommend combining them because the investment is so poor. And the other thing is they're way more expensive. We'll break down some numbers in a minute, but whole life compared to term life insurance is significantly more expensive because part of your payment is going towards the insurance, but then part of your payment is going towards like the cash bucket or the savings bucket. And then the other part is going towards fees and commissions. And you pay significantly more because of, the savings and the fees and commissions compared to term life insurance.
So what you're saying is term life is basically renting insurance?
Yeah, it's a good way to look at it. Almost like a rental car, right? Where you have it a certain amount of time for rental car days or, with life insurance, a certain amount of years. And then it covers you the years you're actually needing protection. Probably like 95 to 99% of people are going to benefit more from a term life insurance policy because of how much cheaper it is compared to whole life. Whole life, there's a lot of reasons we're not huge fans of it, but you're basically buying into an expensive policy with a really low return savings component. And often it can be even more challenging to get out of. Term life policy, you just stop paying, you get out of it. It's pretty easy. Whole life, it can be a little bit more of a challenge figuring out if it's a smart move to get out. So it just adds a lot of complexities that I feel like aren't super necessary.
What about cash value life insurance?
Cash value is basically the umbrella that includes any type of whole life insurance or universal life insurance. If we talk about whole life or universal life, those are both types of cash value insurance. And usually it's called cash value because you're setting aside an amount of cash as an investment or to grow your money.
So it's like a forced savings account?
Yeah, that's a pretty good way to look at it, but it's just a really inefficient savings. But then you're also paying those commission fees on top of that. So it's probably closer to like 2 to 4%.
So what exactly is the true benefit? Why do people like it so much?
I think there's a few different reasons. It sounds safe and guaranteed, especially I feel like the generations before us, they want the safety and the guarantee of the money, depending on what life events they went through. Like our grandparents, if they went through the Great Depression, they went through huge life events and market downturns. And so they want the security and safety that goes along with that. Sometimes it's the fact that they've drank the Kool-Aid from a whole life insurance agent who's been working for their family for a long period of time. And so it's one of those things where like, oh, we've just always used this person in our family and we're going to continue to use them because that's what my parents did and that's what my grandparents did. And ultimately they just got bad advice on what type of insurance to carry. But the big thing that we're going to talk about is they're not comparing it to what they could have earned elsewhere if they just invested the difference of the money.
And just a little caveat, I've heard that you can actually borrow against that cash. Is that possibly a benefit that some people may use for a cash value life insurance policy?
It's definitely not one we recommend because then you're borrowing against a investment that's not making good money. And so whatever interest rate you have on the loan probably isn't going to work out to be beneficial because you're making such little money.
Yeah, so you'd have to offset the difference of like a 3 to 5% cash value life insurance policy, and you would have to borrow against that money and actually get a better return.
Yeah. And then it's like, why didn't you just put that money in an index fund and then chill at the beach because you don't have to do anything else, right? It's so much more simple, right?
Yeah, a lot less complex. So let's talk a little bit about opportunity cost.
It's just the reality that the important part of the conversation is what would have happened if we would have invested that money. So let's just compare a couple of distinctions between term life and whole life plans and how much each one would be. And I will say, just as a warning, it's not completely fair to compare these side by side because some of the money in a whole life policy is going toward the investment and all of the money that you're paying for a term life plan is going towards just the insurance itself. So it's a little bit of a wonky comparison, but I still wanted to show you how different and how much more expensive whole life is. And so if we take $1 million policy for a healthy 30-year-old individual, they're going to pay about $600 to $900 a month for a whole life insurance plan, which is pretty freaking crazy because that same $1 million term life insurance plan would cost them about $25 to $45 a month.
That's a huge difference and much more affordable if you were looking for something that was short and sweet for 20 years.
And then you look at a healthy 40-year-old in $1 million policy, that's going to be closer to $900 to $1,300 a month for a whole life insurance plan. If we look at an equivalent term life insurance plan, it's only going to be $50 to $80 a month. And these were both for the term life insurance, both for 20-year terms, right? And so let's just be conservative. Let's just say you had a difference of $500 between the plans and you chose term life insurance and you took that $500, invested it to like an S&P 500 fund, an index fund. Over 30 years, you would just from that have over $1 million. That's where like the whole life plan does become really costly when you look at it that way. So the real question isn't, does whole life build cash value? The question is, what did it cost you to pay into that plan? Now, where it gets complicated when you have someone who's had a whole life insurance plan for years and years, it's not so simple to just say, hey, you should sell this life insurance plan and switch to term, because depending on how long you've been in it, it might make more sense to hold on to it. If you've only had it for a year or two, it probably makes sense to go ahead and sell that and switch to term life. But again, when you've had a plan for a number of years, it can get a little bit more complicated. And that's where you might want to speak to a professional. The place I've used personally is called Xander Insurance. It's a insurance broker that basically helps you look through and find the insurance plan that's cheapest and right for you. And so you could talk to one of their agents just to get an idea of what makes sense. Can you help me crunch the numbers on my current whole life insurance plan?
So let's talk about like if I actually needed life insurance, how much should I get?
Let's talk about term, because again, we'll talk about some outliers to where maybe it makes sense to get whole life. But again, most of our listeners in healthcare, working normal jobs, term life insurance is going to make way more sense. The simple rule is to get around 10 to 12 times your income for the year for term life insurance. And the reason for this is it replaces your income long enough for you to be able to support your family even after you've passed, to work towards financial independence, and to give your family time to build and adjust financially. Maybe there's like some 20, 30-year-olds listening to this thinking, I really don't need life insurance. But guys, please just get it. We talked about my wife and I are paying $35 to $40 a month for each of our plans. And the fact that so many spouses who end up dying young have to figure out, how do we support our family financially? But instead, if you know, man, we're covered with this life insurance, I can properly grieve the loss of my spouse. Like that, yeah, it even just makes me emotional thinking about it. And we just want your family to be protected. So please protect and help your family and have some kind of life insurance policy if you have a wife or children, depending on your income.
All right, so give me the pros and cons. Why is the term life insurance generally better?
The pros are it's cheap, it's simple, you get a high amount of coverage for a lot less money, and it frees up more money to be able to invest so you can truly grow your net worth. The biggest cons are it expires eventually, and there's no payout if you outlive it.
So that kind of sounds like a waste, Josh.
It's a fair devil's advocate point. But again, insurance is to cover if something were to happen. In my opinion, your goal shouldn't be for you to have insurance for the rest of your life. Your goal is to have insurance until you're financially independent, and then you can be what we'll call self-insured, where instead of having to pay for this insurance premium monthly, you and your spouse say, hey, we have enough money to cover our needs where we don't need a benefit if someone passed. That's why figuring out what is an appropriate timeline for you, because if you're 30 years old and you say, hey, I want to retire when I'm 50, right? If you want to do kind of a FIRE, financial independence, retire early, then you probably want to look at maybe a 20-year term life insurance plan because you're planning to retire then. But someone else might say, hey, I want a 25-year term so I can get to 55. Just depends on the person.
For $35 a month, it's like cutting a couple subscriptions from my Netflix or Hulu. And then I'm also gaining like this really good reassurance of an umbrella over the back of my head in case I die. I do have a good chunk of money that will go towards my beneficiaries, like my family.
Mm-hmm. Yeah, and just to know that your family's taken care of when you go to bed at night is so sad. But we've heard a couple recent stories of like family friends of 30 somethings passing away. And I don't know what the situation was with life insurance, but oftentimes when people are that young, they don't have life insurance policies just because they think I'm not going to be the one that passes away at 30 or 35 or whatever it is. And so that's why we want to continue to encourage you guys, just get it. It's cheap and it will protect and help your families.
That's some great advice, Josh. So, what is the actual argument for looking at whole life insurance?
The biggest arguments, I think, are it gives you a forced savings, it gives you lifetime coverage, and there's a guaranteed savings rate component. I think the strongest argument is probably the forced savings, right? Because part of your premium is going towards that savings. And so you do have an automatic savings each month. However, if you just automate, whether it's your 401k, whether it's a brokerage or different type of investment, if you automate those investments, then you're getting that same guaranteed savings because you're just doing it through a different avenue and you're making a lot more money with it. And the cons, the biggest things that we talked about are it's a lot more expensive. There's lower returns. It's a lot more complex, and commissions are often driving the recommendations from whole life insurance agents. So there's a big salesy component to the whole life insurance. There is a little bit with term life where they might try to like get you to sign up for a longer period, like 25 years instead of 20 or whatever it is. But it's not nearly as expensive and it doesn't feel like you're trying to be convinced the whole time, which is kind of nice. So,
Yeah, I remember one time I got onto a whole life insurance phone call, right? And I was
mm,
like, yeah, I'm thinking about it. And then like I hang up the phone and I've got like 10 life insurance policy people calling me. And then it just feels like, yeah, such a sales gimmick, right? And
yep.
when you have a bunch of salesmen trying to sell you something, I think it's always like, let's take a second and just step back, right? It's like walking into like a car sales lot. You've got 10 good car salesmen running at you like, let me show you, right? And it's like, well, if you're shoving this down my throat, maybe I should take a step back and reflect on, is this really beneficial for me, right? When does it actually make sense to have whole life insurance?
Whole life is pretty rare. And I will say I'm not the expert at whole life insurance. I just know 99% of the time it's a pretty big scam. And so here's a couple outliers where maybe it makes sense. I'm not even saying if you're in this situation, you should go get it, but I could see the argument for these situations. If you have like some very high income individuals, they've already maxed out their 401k, their Roth IRA, their health savings account, their brokerage investing, they're like maxed to the brim and they just don't have anywhere else to put their money. Maybe it's another place to put some money for some conservative savings. Again, I think there's probably better places, but that could be an argument. I think the second argument is individuals who have lifelong dependents. So for example, if you have an adult who has a child with special needs and that child is going to be living as a dependent with the adults for their entire lives, maybe there's an argument to have whole life insurance because they're always going to be on some type of insurance plan. This could be a case where they may need insurance truly forever instead of buying a term life plan. And so these are some of the stronger cases. But again, for most of our listeners, upper 90% term life insurance is going to be the better option. And so guys, just in closing, a reminder that life insurance is income protection. Only buy it if someone is depending on your income. And if you do need life insurance, then term life insurance does it a lot more efficiently, a lot more effectively, and a lot cheaper. Buy term, invest the rest of whatever you have for your margin, and don't let an insurance policy become your investment strategy. However, please do get one to protect your family if it makes sense. Well, thanks so much for joining us today on the Fiscal Clinician Podcast, and we will see you on the next episode.